Alright, just take note that this presentation is purely for educational purposes. It does not take into account specific investment objectives, financial situation, or particular needs of any particular person. Alright, so let's move on right now. Okay, markets has been really quiet of late, especially some of the indices like I think I mentioned this last week, S&P, Dow Jones, most of the US indices still very, very range bound, not much movement, not much volatility. I mean, you look at the VIX, you look at the lot index are still very low. So just be a bit patient, all right? Try, the worst thing you can do as a retail trader right now is try to force the market. All right, it's try to force the market. I know many of traders, many of clients, and many of you in this webinar are yearning to try to mortgage the house and short the bloody S&P, right? But I mean, don't do rash things like that. I mean, always wait for sentiment to turn before joining in the trend. If you have a big urge to have a long-term trade to short a particular index just because you think that it's way overvalued or way, it went up too high, what you can do is this is a little trick that I used to do to manage my psychology. I have two trading accounts. One is the main one. The other one is more for I wouldn't say for fun, but the other one is more for the cheeky ones, the cheeky trade. So let's say if I have a big impulse to do something funny and I know that it's not according to my trade plan, but I just want to see whether it works or not, I'll just enter very small lot size or small contract size on the second account. So the second account I always keep the balance very low. It's just for me to play around just to appease that little voice in me. All right, so it's just it's a trick to manage your psychology, especially if you find yourself always trying to punt in the markets instead of following a proper trade plan. All right. Okay. Oh, hi, Hunty. You don't need to use the mic, Hunty. You only can hear my voice. What you need to, if you have any questions, just type it in the question box, and any point in time, I will run through. I try to answer the questions as soon as possible. Okay. Is it a good time to invest in USD? Heard that the interest rates will appreciate in due course. Yep, that's a fundamental reason. So Hunty is saying that interest rate, the Fed might hike interest rates, therefore USD might be the benefactor of that. Highly possible. Of course, I always say that I'm a pure technician. Okay, it's not that I ignore fundamentals, but I use the charts to guide me. So later, Hunty, I'll cover FX the second part of the webinar about 7:30 or so, and then I'll cover a bit of USD. Okay, according to the fundamentals. Yep. All right, so moving along. Now, for those who are new, again, the question box, please make use of it. Any questions, please shout out. Now, before I start today, I'll just cover a bit more theory. For those of you who have been here a couple of times, people like John, I'm sorry if you get bored, but I just wanted to make sure that those who are new are familiar with price action. Okay, so that you know what I'm talking about, how I base my decisions on, and how to analyze the charts using price action. So this is what I cover every single week. I mean, basically, I try to identify the market based on three different phases. It's either uptrend, downtrend, or consolidation. Okay, but what I'm trying to do all the time is that, especially because my trading style, I'm a more intraday to swing type of trader. In fact, for the past few weeks, I have been very much intraday because there's simply not much momentum in the market. So if a trend started, right, more often than not, it wouldn't last. It's quite hard to sustain. All right, there's always a reversal. So in such market conditions, I'm a bit more quick to take my profits. So if you look at this market, this is price action, and basically an uptrend is a series of higher highs and higher lows. A downtrend is a series of lower low, lower highs, and consolidation is a mix. That's where your chart pattern theory comes in. It can be a wedge, it can be a channel, it can be head and shoulders. But basically, once you identify the three market phases, that's where you can zoom in to plan your trade. Okay, let me give you an example. Hold on, let me just take this away. So essentially, what I'm doing all the time is I'm trying to use different time frames to try to see whether the opportunities in the market. Now, my main time frames are my daily chart, okay, and my H4 chart. Okay, this is more for intraday trading. Okay, for daily, so my daily and H4 is very important. So let's say my daily is doing a nice uptrend. You guys can see the drawing, right? Okay, So this is an uptrend, isn't it? Because you got higher low here, higher high, higher high, higher low. So this is a nice uptrend. Yep. So let's say the market retrace and we are somewhere here. So assuming this is a nice support level. Okay. And at this level, the H4 is showing something like this. Okay. So the H4 is showing that. So this area here is basically the whole H4 here. All right. So what I'm planning to do is basically, if my bias, I'll set the bias first. So my bias normally be based on daily direction. So if I look at price action on daily chart, right, the bias is to buy. It's bullish, isn't it? So once my bias is cast in stone, that's where I'll go to lower time frame and start planning my trades. And what I'm looking for is for the lower time frame to combine to coincide with the higher time frame direction. Hunty, when I say H4 means 4-hour chart. Okay, so what I'm looking for is for the lower time frame to confirm my bias on the higher term time frame. So some of you might ask, why are you basing your bias on higher term time frame? Simply because the higher term time frame charts are more respected, less noise. Yeah. So if a daily chart is showing something like that as support, and the 4-hour chart is showing something like that near the daily support area, I'm very keen to see what happens on the 4-hour chart before I jump in. Okay, so again, my trade plan based on daily chart bias is to buy because I'm bullish. I'm looking for support to buy. So when I go down a lower time frame and I see a 4-hour chart consolidating around this region here, okay, I'm still patient. I still want to wait. All right, I still want to wait for this consolidation for the market to at least break out before I enter a buy. Okay, so I'm still waiting. The 4-hour is sideways, means that it's not coinciding the daily uptrend yet. I'll still wait. And more often than not, what I do is that at this level, I even go to a H1 chart, a 1-hour chart. And basically, the H1, this is more, remember this is a range. And what I'm waiting for is for the H1 to break out of this range, pull back, maybe take a long here, and then ride it up. Okay, so you can see that my buy is based on daily chart, and I'm planning all the way down to a lower time frame, like 1-hour chart. And when I buy at this pullback here, my stop loss can be somewhere here. And what I'm doing is that my stop loss is based on the H1 chart, but essentially my target can be based on the daily chart. I can either target the previous high here, or I can target a new high here. So the risk to reward is always going to be in my favor, in positive territory, because my risk is always planned a lower term time frame, and my target potentially can be on a higher time frame chart. Any questions? Okay, so if you see the daily chart, right, my first target will always be near the previous high. Okay, in fact, a daily movement from here to here potentially can be 50 to 100 pips even. All right, you don't even need to target a new daily high. All right, so more often than not, even though I base my bias on the daily chart, my target is something like near the previous high, but my risk is still kept on the 1-hour chart, 15-minute charts. Okay, so basically I'm trying to combine different time frames and trying to form a highest probability trade based on the higher term time frame bias and trade planning on the lower term time frame. Hunty has a question. That means you're playing with the so-called resistance line which share traders utilize to. What do you mean by resistance? Yeah, I wouldn't say playing. I mean, I would say I'm waiting for breakout of a lower term time frame to confirm the bias on the higher term time frame. That's it. It's that simple. Okay. I hope I answered your question, Hunty. Any other questions before I move on? So I just want to share a bit more theory so that you know what I'm looking out for on the live markets all the time. If you guys got any later if we got any pairs or any specific markets, please tell me if you want to cover it. All right. Even if you have taken a trade or you're stuck in something, please highlight as well. Then we can cover it together. Okay. So there's no questions. Let me move on to the live markets. Okay. Let's see. All right. So now let's go to S&P first. Sorry. Okay. So this is S&P 500. Okay. If you see the weekly chart, nothing much has changed since I did the last webinar. This 2130 has broken. Key resistance is broken, making an all-time high. My trade plan was to pull back and buy it up. So right now we're just pretty much sideways. But in terms of the price action, it is bullish. Okay, it is bullish. If you go down to lower term time frame like a daily chart, Okay, you can see that really we have been stuck like that for the past few weeks. In fact, the whole August has been very uneventful. Okay, just range bound anywhere between 2150 to about 2190 or so. Okay, for those of you really short-term traders or range-bound traders, you might have taken some pips of the market through this range-bound trading. Basically, sell resistance, long support, sell a resistance, long support. Okay, not my cup of tea, so I'll leave it alone. But I did mention in the last webinar that be a bit careful because some form of divergence is coming up here. You can see that the market is making, the price making high, but the swings are making low high. So it's a bearish divergence, okay? But what you want to do is that you just if you're not a range bound trader, okay, what you want to do is to simply just wait and see what happens. It's a pretty straightforward trade plan. So first thing, 2190, okay, if it breaks resistance, then most probably we are going to next level of resistance, maybe around the 220 or so. Alright, so just pay attention to 2190. However, if the support is broken, high chance that you might make a pullback all the way to 2130. That's it. That's the trade plan for the S&P. Very simple. Okay, just take note that the momentum is still on the upside. So even though if you think that the market is going down, it's not showing yet. Okay, it's still very, very sideways. Yep. How do we actually know which are the optimal high and low lines within such charts? Yeah, correct, Hunty. I mean, normally I try to use high-term time frames like daily or weekly or 4-hour to determine my bias and support and resistance, because the higher the time frame, the less noise. Alright, so if you're intraday, I would suggest looking at daily and 4-hour. If you're a swing trader, meaning that you keep your trades for a few days, I would suggest look at the weekly and daily charts. And it's always good to start planning top down so that you won't get confused, or you won't get swayed by the shorter term movements. Alright, so this daily charts pretty much sideways. I don't have much direction here. Sorry, John, are you trading any of the US indices? Nope. Okay, pretty sideways, right? So nothing much to do there. So same thing for the Dow Jones. I mean, if you look at the weekly chart, waiting to short Hang Seng. There's a counter trend kind of thing. Yeah, that's interesting. Let's see what happens. I'll move on to Hang Seng soon. Dow Jones, same thing as S&P. So it just broke a new high, all-time high. Looks bullish in the weekly chart. Daily chart, again, you see, very similar, very range bound. And it's really hard to trade such markets, especially where we are right now, in the middle of nowhere. Take note the levels are 18,300 as well as 16,600 or so. Okay, sideways around those levels. So, I mean, even if you want to do your range bound trading, right, it's better to wait for it to go to extreme levels, these two extreme levels, and not take anything in between. Okay, in between is very low probability. All right. Again, they highlighted last week, bearish divergence present on the MACD, so just be careful. Okay, so that's daily chart. If you look at the 4-hour chart, shorter term time frame, yeah, not much to look at. Okay, I drew a circle here last week, and here we are right now. Really not much direction. All right, so just be very, very patient with the US indices. Okay, let's move on to the DAX. Okay, looking at the DAX, so this is the daily chart. Let's go to the weekly chart first, yeah. Alright, weekly chart for the DAX looks very bullish. Alright, if you see there's this channel breakout to the upside, it broke a very key resistance on 10,005, okay? And the trade plan that I mentioned came out nicely. If you were here, when was this? This was in, the rebound was near August 22nd, I think 2 weeks ago. You can see there was a nice retracement back to a 10,005 area, and the thing pushed up again. This is a beautiful trade plan to the upside. Okay, right now we are close to the previous resistance around 10,007, so I will not be doing anything. Okay, taking a look at the daily chart, right, you can see at this circle I drew. I think I gave a very clear example last week on how I go down to lower term time frame and where's a possible place that I could have taken the trade from a rebound of the daily support level. Okay, but again, you see all the way the market moves. So the daily touch the 10,004, 10,005 area. Very good support, consolidated a bit, and we start moving up. Right now, it's a bit too late to do anything. Even if you're bullish, I would rather let it break the 10.8 clearly first, or let it come down to 10.4, 10.5 before taking it up again. Okay, because right now we are near too close to resistance. There's not much meat left to the upside. Okay, so daily chart, just be a bit patient as well, because we have made a push. This circle here, this area was a high probability setup. Anywhere in between here, low probability. Okay, so it has made a push up, so let's just wait and see, because for all you know, right, it might just consolidate all the way back down 10.4, 10.5 again. Right, so even though it looks bullish, right, the level of entries are not the optimal level now. Not the optimal level. Okay, at least you want it to break the previous high first. Then maybe you jump in. Alright, that's for the DAX. Let's see, let's move on to Hang Seng. Okay, so the Hang Seng chart, let's go to the weekly chart. Okay, Hang Seng chart is very bullish. Okay, you can see that how many consecutive weeks of uptrend. It caught me by surprise because I was looking to long this particular instrument. I wanted to retrace to a certain level, I think about 2200, but it didn't happen, and I think it shot up. Okay, so be it. I missed the trade. Doesn't matter. Better than losing money. But anyway, the weekly trend is definitely in the upside. Alright, definitely in the upside. But if you draw a line across here, okay, you can see that there's multiple level of resistance. Here, here, here. This is support. Here, and now here. Okay, so I think there will be some form of reaction from those levels. Okay, so one of the way is that, I mean, even if you're bullish, right, I think it's way overextended. Right, so be prepared for a leg down before it wants to go up again. Let's go to the daily chart. Okay, so you can see that how the market just push itself higher, higher and higher. Let me just take away some of the drawings. Okay, so you can see the market pushing higher and higher. So Hang Seng, right, now if you want to short it, let me see a 4-hour chart. Yep, looks, how you plan to short, John, if you don't mind sharing? Because it looks very counter trend to me. Are you planning a short-term short 15-minute chart? So the trend is very bullish, okay, and I know some of you out there have a strategy to make advantage of bullish trends by going counter trend, right? So for this case, by going short. However, just be very careful, especially when you're going counter trend. You need to be very disciplined to cut your losses when you're wrong. That's a key takeaway when you're trading counter trend. Okay. Yeah, it looks extended. The only thing that let me see whether there's any. Yeah, I would say that the only thing that you might want to catch is quite extended on daily and 4-hour, and there's a chance that it might retrace back to the 23650, 23600 area. So this area here is where you want to really start finding opportunities to take it down for maybe the 5-minute chart. Okay, only if you're comfortable with counter trend trading. Okay. If not, if you're just new to it, I suggest just sticking to the trend. It's much easier. Okay, but this area here, possibility that it might drop and might come and test the previous support near the 23600 area. Okay, so yeah, I just got to wait for it. So if you look at the 15 minutes, every chart still looks bullish, man. Like that. Even the 15-minute looks bullish. Okay, so just be a bit patient on taking the counter trend for Hang Seng, because who's to say that it won't make a new high again? Okay, you never know. It's all sentiment driven. Alright, so that's the Hang Seng. We'll only try this bearish divergence. Yep, good point. Divergence is very important. Are there any divergence? I don't see any divergence in the market right now. Still looks good and legit to me. The 1-hour chart is a bit of divergence. So you can see that this high and this high, sorry. This is a high, this high, lower high. Okay, so this is called a bearish divergence, which means that the 1-hour must start turning around sooner than you think. Okay, so that's for the Japan 2 to 5. Okay, Hunty, your question. Hang Seng looks really bullish, but isn't there some risk in shorting such market? What we think can go further can result in roller coaster like drop. Don't you think so? Yeah, Hunty, I mean, yeah, like I say, shorting is counter trend. It's definitely dangerous. Okay, it's nothing wrong doing counter trend, but you need to know when to get out. That's very important. I notice a lot of clients when they counter trend, if they're wrong and the market starts making you high and they're still stuck in their losses, a lot of them do not have the discipline to just cut losses and walk away. That is the problem. Okay, just that now it looks a bit overstandard. It might retrace back to support level, but right now every chart is screaming buy. So don't be the first, just be a bit more patient. Okay, the 5-minute chart is the only one that's consolidating a bit. But don't forget, there's a lot of momentum from the 1-hour chart, daily chart to push in higher. So just be a bit patient. Alright, so that's the Hang Seng. Did I answer your question, Hunty? Okay, so that's the Hang Seng for you. Let's go to Nikkei. Alright, so let's take a look at the Nikkei. Let's go to weekly chart first. Okay, weekly chart looks very sideways, alright. The past few days have been a little more bullish, and the key level here is that around the 17,000. It seems to have broken it, and it's highly possible that we're targeting this level of resistance near the trend line, anywhere around 17,800 or so. Okay, but weekly chart is still consolidating. Daily chart, it is also consolidating, but it's making it move higher, so you can see that the momentum is to the upside. That it make so-called double bottom. Higher high, higher low, same high but still higher low, another high high, and potential higher low. Alright, so this is what might happen. It might make a push down to the support level, mark around here for a few days, and then slowly go upwards. Okay, but the daily chart looks a bit more, slightly more bullish than the weekly chart. Alright, but this might happen. Okay, just based on price action. Let's go to the 4-hour chart. Okay, so you can see that the 4-hour chart looks definitely more bullish than the daily or the weekly. Okay, you can see that it's making a series of high low. There's a bit of a trend line support here as well. You see this? Hold on, let me change the time frame here, yeah? Okay, so taking reference from the daily chart, right? Most probably it might come back down to this support region again, and then we see whether it can push higher. Okay, but daily trend is definitely up. I'm just waiting for it to come down slightly more further for support level, probably around the 16,008 or so before I'm interested to try to get it up again. Okay, but it looks quite well supported at around the 16,008 area. Yeah, 16,008 area. Looks quite well supported there. Alright, that's the Nikkei for you. Any other indices that you'd like me to go through? China A50, okay. Okay, China A50. I think last week I mentioned that it looks bullish, right? Let's see. I think it went up from there. So if you look at the weekly chart, China A50. Let me see. Okay, so what I like right now is you can see that it's consolidating a bit somewhere here. Okay, the key level here is now. This is where it gets a bit tricky. Okay, it looks a bit more bullish. This is a weekly chart. Let me just do this line first. Okay, what I like is that it has made a higher low here. Okay, it has made a higher high here. So the momentum is definitely to the upside. However, this 9800 area is still very, very strong resistance. If you look at the daily candle, you can see that the daily candle close is still below that 9800 level. That shows how strong the resistance is. Now, what you want to look out for is for it to break above this level here, and then the uptrend would definitely look much more intact. Let's go to the daily chart. Okay, so this was my predicted direction for the past, I think last week, and it did come down to this support level. Look at how beautiful it retraces. Well, this is a beautiful trade. Okay, when did this happen? I'm not sure, but basically it retraced exactly the previous resistance turn support, and right now it's trying to raise equity to push it higher. Okay, to push it higher. So if you've taken a trade anywhere in this support region, I think the first target can be the previous high near the 10,000 level. Okay, near 10,000 level. But anytime we go near 10,000, the probability gets smaller and smaller because we're reaching the next level of resistance already. Okay, but if you look at the weekly chart again, okay, you can see that it still looks rather bullish unless this level, the 9680 level breaks, there might be reversal. If not, it still looks bullish on the China A50. Just let it break the 9008 mark clearly first, and then you can join the uptrend. Okay, Mr. Lim? Okay, so any other indices questions before I move on to FX? Alright, there's nothing. I'll take 10-second pause and then I'll start on the euro dollar.